Now adjust the volume control so that the sound can be heard in all parts of the room.
This is the Protect Your Assets podcast.
You get the idea?
It's on the internet.
Make him the cutest that I've ever seen.
Go on.
Give him two lips like
It's like no cheese I've ever tasted.
and tell him that his love
Here's the Sandman.
over Sandman.
Are you feeling good about the stock market over the next few years? Well, according to Chair Powell, who just spoke this past week, this long-running bull market we've been in could be getting a little long in the tooth. So what are you doing with your largest liquid asset right before you retire? Think about it. I'm talking about your 401k. And this quite literally might be the perfect time to hit the reset button on it. What am I talking about? Well, stick around today and find out. Good morning. I've had my donut. Welcome to Protect Your Assets. I am David Hollander, your host. So good to be with you. Spring, it's here. It's beautiful. You can feel it in the air, can't you? So much to be grateful for. For those of you just joining us for the first time, welcome. People around here, you hear the jingle, they call me the Sandman. And that's because I help you keep more of what's yours, whether it's tariffs, taxes, the stock market, a lawsuit. I've been managing a tax, legal, and financial practice for over 30 years, and we have lots of good ideas for you today. You can always email me a question. Love those questions. Email questions@pyaradio.com. Anytime, questions@pyaradio.com. So how are you feeling about the stock market? Are you optimistic? Are you concerned? Well, we're coming off of some truly great years, and the data says we could be overdue for some rough waters. The easy money train may be pulling into the station. So what do you do in order to hope for the best, but plan for the worst? Well, for starters, it's better to prepare before the market goes haywire than just reacting in the moment. So today we have a plan for you. We have 5 ideas, 5 steps to help you safeguard possibly your biggest asset, your 401k, from a market downturn before it hits. Now let's get started. So as I was talking about, the Fed Chair Powell, who you all know runs the Fed, he met this past week on Wednesday and started talking about their concerns about the economy. He did introduce this word called transitory, which I'll tell you, it means good things. And so 2 things happened as a result of that meeting. First of all, what does the discussion mean for interest rates in the market overall? Well, first, they're not optimistic. The biggest positive from the Fed was that they signaled they're watching the economy closely, but they also detect there's a lag, if you will, in momentum. And that is concerning. And so what are they going to do to support the economy? Well, they did say that they would be there basically to help the market if it needed it, but they weren't directly clear on that, because when you go look at the dots, which is what we do, it basically shows that they're not going to do anything until the market drops, say, another 10%. So that's a little scary. I got another question. This came in as a question. Did the Fed do a mini QE, quantitative easing, as part of that meeting? And the answer is no, I don't think they really did. Let me explain what that means. Got to rewind this a little bit. This is a little economic speak. The Fed did do a massive QE program, you may remember back in COVID, where the Fed went ahead and they bought $80 billion worth of treasuries. And they went ahead every month and $40 billion worth of mortgage-backed securities every month. You may remember this kept mortgage rates low and it kept capital in the market available. And so they were flooding the economy basically with cash to keep the banks lending and promote economic growth, which seemed to have worked. These purchases caused the Fed's balance sheet to go higher, much higher. In fact, did you know that before the pandemic, the balance sheet was at $4.1 trillion, and by the end of COVID, it was over $9 trillion. So to help combat inflation, the Fed began to reduce the balance sheet in June of 22, and this is a process known as quantitative tightening, QT. So what the Fed's doing now is that they said instead of not replacing $25 billion in maturing treasuries per month, they're going to now not replace $5 billion per month. What that means is they're going to leave about $20 billion more treasuries per month, which will shorten the supply of what's out there. So practically what they're doing is they're reacting to what they're seeing as a slowdown coming. They're doing it through the treasury market. And I don't think this is a QE. So thank you for the question. And the reason I don't think it's a QE is because the Fed isn't adding more bonds to the inventory. Quantitative easing occurs like it did at the pandemic when bond purchases are addictive or additive to the balance sheet. And right now, this is just reducing it overall. So that's what that's all about. So no, that's not it. And I think they're not going to do anything for a while. I think you should look for about a 10% pullback, in which case they may decide to reduce rates. And it's looking like it might be twice as far as what's happening. So what did the market do in reaction to that? Well, this week was the first week we saw a little bit of a pause. You saw the Dow up a little bit. It was up 1.2%, still off for the year. S&P was up 0.5%, again, still off over 3.5%. NASDAQ, positive finally, after all these weeks of deluge, 0.2%. Year-to-date, off about 8%. And the international index still looking good, up over 10%. So I keep talking about that. With this market where it is right now, you want to keep looking at value in those things that react like the international markets do positively when we're not doing so well. Also, your fixed income, the 10-year treasury this week was up 0.1%. Not bad. Oil, this was as a result of what's going on in the Middle East. So that was up 1.7%, $68.30. And bonds, again, had a pretty decent week overall, up 0.5%. So again, what's going on with this economy? We have to keep watching it. And today we're going to talk about your 401k, which probably is your biggest asset, and you probably want to protect it if you're getting ready to retire or you're in retirement. There are some things you can do right now to shore it up before it's too late. So when I come back, we're going to talk about that. There's 5 ideas I have for you this morning. You are listening to Protect Your Assets, because that's what we do. I am David Hollander, Sandman, and we will be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to PYAevents.com and signing up for our next free event. That's PYAevents.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander, and this is Protect Your Assets. People call me the Sandman because I help you protect more of what's yours. And talking about keeping more of what's yours, today we're talking about your 401k, which could quite possibly be one of your largest assets. But what's going to happen in the future? How are you feeling about the stock market? And speaking about saving some money, appliances have gotten so expensive, haven't they? I mean, I had to recently redo my kitchen. Pretty much had to buy everything that we have now. And so I went into Friedman's Appliance in Pleasant Hill and had a really good experience. And so coming up March 28th through the 30th, they're doing their red tag clearance sale. And what's so great about this is you walk in, there's a bunch of items that are on really good prices. Like I went in there last time they did this and got a great barbecue and a dishwasher. There's things from really good manufacturers like Miele, Bosch, Electrolux, LG, Maytag. And they're on big time sales. So if you want to save some money, if you want to put more in your pocket and get some great service, then check out Friedman's March 28th through the 30th. All right, let's get back to protecting your 401k. And why I'm talking about this today is Chairman Powell, who runs the Federal Reserve and Treasury. He was just in Wednesday talking about the market and what they think about what's coming. And it's the first time I've heard him say that they're a little concerned about the future of the market. And they talked about what they were going to do. The majority of people we talk to have most of their wealth tied up in their 401ks. And because of this, right now, it's important that you help protect what you've made so far. So if you're going to live off of that in the future, now's the time to make some changes. So what are some things you could do? Well, the first thing you could do is to make sure you have enough cash at the ready. What do I mean by that? So if you're going to retire or you're in retirement now, I recommend that you keep at least 6 months of expenses in money market or liquid holdings. So right now, if you have most of it tied up in stocks, say, or bonds in your portfolio, this could be a good time to take a look at those, sell off some of those now. When you do a distribution out of your 401k, you know that's ordinary income. If you don't have enough for 6 months, go ahead and do that. You know, you could pay it out over the next 6 months, but just have it sitting in the money market, because right now you should be able to get over 4% in your money market, and just let it sit there. And that way you've shored up a little bit before any sort of a drop would come. You don't want to have to use your 401k as an emergency fund. And so by having enough cash on hand at all times is really a good way to smooth out things and avoid having to tap your retirement assets when they're down. You should, even in retirement, think about a portion of your 401k being what I'll call long-term. You could also use the age-based rule to run that allocation. What do I mean by that? Let's say you're 60. Well, you could have 60 to 65% in fixed income and alternatives. I did a show a couple of weeks ago just on alternatives, just in addition to fixed income. And then you'd have 40% in equities. And if you are in or close to retirement, then you should take a more defensive posture right now to avoid the market swings that could really throw your financial plan into a tailspin. So the first idea, have enough cash. Second, what's the second way to protect one of your biggest assets right now? Well, if you've been paying attention to the market segments that we do at the top of the show each week, then you know by now that dividend-paying stocks, value stocks, can make sense at this time. Why do I say that? Well, I've been talking about value stocks for a while, certainly since the election. And that's because during the previous administration, i.e. Trump 1.0, some things worked better than others. And we saw that theme happen again at the beginning of this year through now. It's been working if you take a look at it. But what you'll see with many value stocks is the following. They trade at pretty low PEs. What do I mean that? Price to earning ratio. So growth stocks typically trade at 20 to 30 to 40, sometimes 50 times earnings because they don't really have any earnings, but they're hot. They're good companies. They're called growth. Value stocks, they earn money. They do practical things, kind of boring things, not exciting. And so maybe they trade at 6 to 7 to 8 times earnings. So they're not too exciting. But what do? They pay dividends. And if you have as part of your portfolio dividend-paying stocks, even if the price of that stock drops or fluctuates, like all stocks do over time sometimes, right? It hurts you to look at the statement, but it doesn't affect your income. Because if you bought that stock at a certain price and it pays off a certain amount of income each and every month or each and every quarter, depending on how you bought that or what you own, then that cash flow you can count on when the market is down and you won't have to sell it. And it's important to really take a look at your income stream to make sure that it's unaffected when the market is in a tailspin. And as we've seen so far this year, volatility hasn't really hit the value stocks as badly as it's hit the growth stocks. So I know retirement is full of complicated choices. How to invest your money so it's preserved but still grows. How to keep your taxes low. How to leave things to your loved ones with the least amount of taxes and hassle. And how to make your money last so you can continue to live the life that you want to live. Do you know if your current retirement plan will continue to work if the market were to drop. If you haven't been through that, or this is the first time you may go through that in retirement, then you might be exposed. You know the saying Warren Buffett talks about, when the tide goes out. Well, find out if your shorts are buttoned up. Get a second opinion right now by getting my retirement checklist. I'm going to give that to you right now this morning. If you call in, it's absolutely free. This is a great checklist you can run through just to see if you're buttoned up. Call this number right now to get this free report. 866-PROTECT, the number to call right now to get your retirement checklist. 866-776-8328. Dylan and Nick are up there right now. Give them a call, 866-PROTECT, and they'll take your name down and they'll email you out a PDF. Coming up next, it is time for our They Say segment. And we're going to talk about they saying that when you have a 401k, you can't get outside advice, and find out why they're so wrong if you work for companies like Chevron, Enphase, Oracle, or Visa. You listen to The Sandman on the Protect Your Assets show. We will be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to PYAevents.com and signing up for our next free event. That's PYAevents.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander, also known as the Sandman. And this morning we are talking about one of your biggest assets, your 401k. And Chairman Powell spoke this past week, got me a little shaken up. So now we're going to talk about it. There are 5 things you could be doing to protect your 401k if you're retired or about to retire. Last segment, we talked about the first 2. Have more cash and make sure you have dividend-paying stocks. You can register right now. Go to the website, libertygroupllc.com, libertygroupllc.com, or call us, 866-PROTECT. So now it's time for one of our fan-favorite parts of our show, our They Say segment, where we debunk common myths, half-truths, and sometimes just bad advice that they say.
Who are they? What do they know that I don't? And what are they saying this week? Here's David Hollander, the Sandman's answer.
All I know is that I don't know.
All right, so here's one they say. They say that if you work for AT&T, Chevron, HP, Lockheed, Oracle, Enphase, Visa, that you can't get investment advice on your 401k. Is that true? No, in fact, it's not. There's quite a few more companies in the Bay Area that you can get help with. You just have to ask. So we have a whole list we're happy to share with you to find out if you're on this list. And every one of these companies up and down California have what's called a self-directed brokerage account. So you may want to write that down, an SDBA. Because this is number 3. Maybe you can get some help with your 401k, and that could help you shore it up if something bad were to happen. So get some help, get it custom. You can do that by just using this option. Find out if you have it. We're more than happy to work with you and help you develop your own customized retirement plan. All right. What's another thing you can do? Well, another thing you can do is... well, don't put it all in one basket. I see this a lot, especially if you work for one company. A lot of people will just buy all their company stock, and they put everything into one stock or in the best performing index, the hot sector, technology. This can wreck your 401k. And I highly recommend you don't do that if you're close to retirement. So number 3 is don't put all of your dollars in one basket. Number 4 would be look at diversifying your portfolio, trying to spread it between a different mix of stocks, bonds, alternatives, things that might not be in your current 401k. You might be able to get some things outside of your 401k through the self-directed brokerage option. So things that you didn't even know existed. Having all your money tied up in a high-octane technology sector fund is also not a great idea. It's great on the upside. Like the last few years felt really great, right? You probably are making over 20% per year. But look at this. In the last 2 weeks, we've seen NVIDIA down over 20%. So it's better to own broadly diversified mix of different things so you can minimize those losses when they occur and smooth out that ride. This makes it easier on your stomach too and your nerves when you're sleeping. Makes you feel better. All that will help. The fixed income portion of your portfolio, which should consist of bonds, money market CDs, alternatives, and cash, those also can act as a buffer to protect any sort of deep stock market correction. At the end of the day, the best thing you can do is to position yourself to weather a market downturn, particularly if one is on the horizon. Again, this was me listening to Chairman Powell this past week and what he thinks he sees in the economy. And so if you're trying to protect the downside, now is the time to take advantage of it. I know there's so much to do, so much navigating retirement, taxes, risky markets, drops in the market, long-term care. Coming up next, well, your 401k could be a tax trap. How can you turn your 401k into tax-free income for the rest of your life? We'll find out when I come back. It's all coming up next. Keep it right here.
If you missed any of Protect Your Assets with David Hollander, all you have to do is go to pyaradio.com where you can download or listen to our latest shows for free. Just go to pyaradio.com on your computer or mobile device when it's most convenient for you. That's pyaradio.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back to Protect Your Assets. I am David Hollander, also known as the Sandman around here. And that's because we talk about the things that can protect you from losing the things you work so hard for. So today we're talking about your 401k and 5 things you can do right now in case the market were to drop, which, I don't know. You never know. April 2nd, right? The tariffs are going to be underway and we'll see what happens. But now would be a good time to be looking at your 401k and thinking about some things you might need from it and how it could take care of you over this next year. So the previous part of the show, we were talking about the top 4 things, which were have more cash, have more dividend-paying stocks, value stocks in your portfolio. Don't have it all in one company stock or one basket. Possibly rebalance, hit the rebalance button. And what I mean by that is right now, if your portfolio has gotten a little out of whack, maybe international is up a little bit, maybe some of your stocks are higher value than others, now might be a good time to just hit the reset button and adjust it to your age in relation to your fixed income and equity position. And by doing that, you might be putting in things that are less volatile if the market were to drop and protecting what you've worked so hard for. We've got a couple more things we can cover here, but before I do that, let me talk about my friends over at Friedman's. Now, I have been in the position to buy a lot of appliances lately, and this wasn't of my own choice. It just kind of got forced on me. And yes, my wife and I went in there and toured the beautiful showroom. And of course, it's beautiful. And you want to have everything just like that in your house, right? Especially have it clean. And maybe even have someone making you pizza and serving you beer. Wouldn't that be great in your own place? Well, that's Friedman's. I mean, you walk into Friedman's and they have people making food and giving you drinks. And it's great. It's really a lot of fun. And they have coming up March 28th, starts week next Friday. March 28th through the 30th, they're doing their annual red tag clearance sale. And what this is where they take a lot of the items they've been accumulating over the year, they just have, they put them out with some big savings on them so you can buy it right there on the floor. And they're such brands like Miele, Bosch, Electrolux, LG, Maytag. And it is first come, first serve, so starts Friday. I'd recommend you get there Friday. And it so happens that Greg Papa is going to be there next Friday as well, so you could shake Greg's hand. Visit Freedman's Appliance in Pleasant Hill for their Red Tag clearance sale March 28th through March 30th for the best time to save big on a new appliance for your home. And how else can you protect yourself or save money? Well, we're going to be doing a workshop. This is my Tax Smart workshop. There still are some things you can do, particularly if you're paying a lot of taxes. The tax sting is painful. And if you have a corporation in California, you just filed your returns. They were due March 15th, and you probably paid your estimates on your corporate income. And that 1.5% tax, especially if you make a decent amount of money in your business, was pretty painful, wasn't it? And now you're getting ready to file your personal return. It's due on the 15th, and you're looking at all those taxes you paid. And you're probably wondering, if I retire and I make, I'm in the 32% bracket, can I afford to keep paying all those taxes? Do I like paying all those taxes? Is there a better way to do it? The answer is yes, there is. There are 5 different ways to pay less in taxes and keep more of what's yours. And if you don't know what all those are, then you have to come to my workshop. That'll be next Thursday, March 27th in San Anselmo. We're doing a place called Enchiladas. I don't know if you've ever been there. It's a great spot. And it's in San Anselmo. And we'll be coming back in April as well. But if you want to come next week, go to our website, libertygroupllc.com. There's a events tab. You can click on that. And if it says wait list, don't worry about it. Just put your name in. And then tell them you listen today, and we'll get you in there. Don't worry about it, all right? So today we're talking about the 401k, and my goal today is to help you keep more of that when you retire. Risk. When you don't need it, you should be reducing it or getting rid of it altogether because risk is costly. And if you think back to March 2020, think about that. It was 5 years ago. Your 401k became what? A 201k, a 301k pretty quickly. Remember that? And there's an MIT professor. You can read about him on Google. Just Google Professor Merton, Merton. And according to him, the question you should be asking yourself about your retirement and your 401k is, how much income will you need in retirement? And what steps can you take right now to make sure that happens while at the same time you reduce any unneeded or unnecessary risk? This is straight from Professor Merton. And what he's really saying is, if you live another 20, 30 years, how do you make sure you have enough income to do that actually grows with inflation? That's tricky. That's different than just saving money, isn't it? It's a whole different skill set. And so if you haven't been doing that, you don't know how to do that, that's what he's talking about. So my fifth and final idea about how to do that is to turn more of your retirement into tax-free. And if you work for Intel, Google, Microsoft, Apple, you have something internally which is known as, write this down, the backdoor Roth IRA. Yes, this is an opportunity. You have to ask for it. They're not going to tell you about it. I have clients who work at all these companies, and every time I bring this up to them, they say, "What?" I said, "Yeah, you have one of these." "No, I don't." "Let's call right now." Call. We get them on the phone. "Oh, yeah, you can do that." And then we go in and we show them how to do it. Anyway, so this is something you can do. This is an opportunity for you. And in 2025, you know this already, if you're under 50, you can put away $23,500 in your 401k. If you're over 50, you can add $7,500 to that. And right now, if you're between the ages of 60 and 63, you can add $11,250 to that. Just for you, just for those 60 to 63 right now. But if I told you you could contribute $57,000, would I get your attention? That's a little more than all what I just had. I'm good at math, but that's not 57. How do you get to that? Backdoor Roth IRA. You need to find out if your employer allows what's called the backdoor Roth conversion. Because if you work for Intel, Google, Microsoft, or Apple, they do. And if you're not sure, if you don't work for those companies, if you're not sure if your employer offers this, and see if your 401k plan allows it, because it has to be spelled out in your plan. That's how you get the right to do it. It's actually spelled out in there. And so if it is, if you have the right to make after-tax contributions, and it allows in-service distributions, also known as plan conversions to Roth from 401k, then you're on the right track. And so we can help you manage all of that and guide you on the questions and the steps you need to take to make it happen. But you have to help yourself. If you have a 401k, an IRA, or some other type of brokerage account, and you're getting ready to retire, you need my retirement checklist. Just go through it. It's real easy, and it will help you figure out if you're on the right path. So I'd like to give a big thanks to the Protect Your Assets team for putting together a great show today. My executive producer and network manager, Kevin Renfer, and all my fabulous producers back there. You got Lee, you got Dylan, you got Nick, you got Raph, and Phil. Thanks, guys. Because without my team, I'm just another pretty voice on the radio. You have been listening to the Protect Your Assets show. I am David Hollander, the Sandman. Go out and make the rest of your life the best of your life.
Investment advisory services are offered through Liberty Wealth Management, a registered investment advisor. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. The strategies mentioned are not suitable for everyone. The information expressed does not consider your specific situation or objectives and may not be appropriate for all investors. Past performance is not indicative of future results. To better understand the risk associated with investing and how it reacts to different market conditions, listeners should always consult with their qualified investment professionals, financial advisors, legal or tax specialists, and conduct their due diligence before making any financial decisions or taking any action. The legal information provided on the air is not intended to substitute for callers hiring their lawyers to advise them about personal legal matters. Investments involve risk and, unless otherwise stated, are not guaranteed. Liberty Group LLC paid for the following program, and the host's views and opinions do not represent those of the station or its ownership. California Life Agent number 048569. Persons engaging the services of one affiliate of Liberty Group LLC companies should be aware that each company is operated separately. You're listening to the Protect Your Assets Radio Network.